Hi everyone, so the aim of this video is to give an introduction to cryptocurrency, try and give a basic understanding of it, why invest in it, what Bitcoin is, and how they compare to the traditional financial system that we currently have. So let's jump straight in. This is intended as an introduction, so I can go deeper into things in future videos. If you let me know in the comments what you'd like more of, that would be brilliant. And if you do get value from this and could like and subscribe, it will help out massively. So thank you very much for that as well. So what is cryptocurrency? To understand that at a basic level, let's break the word into two. Firstly, let's look at the word currency. So when we think of a currency, we tend to think of a note. For example, in the picture in the bottom left-hand side here, whether it's the US dollar, the pound, the euro, the yen, or whatever really, but that's what we think of. But the word currency actually comes from the Latin currens, which means the condition of flowing or running. So currency is a medium or form of exchange, whether for a service or a good, or it can be seen as the flow of something during an exchange between parties for a good or for a service. We've had many mediums of exchange in history. We've had shells and precious metals through coins. More recently, we've had paper money, and now we have plastic money or electronic money with plastic or metal cards like debit cards, credit cards. And now we have network money or cryptocurrency. And it's important to note here that money is one of the oldest technologies humans have. And you can see here in the top right-hand side, the oldest medium of exchange that's known today. And it's a Mesopotamian clay tablet from 2038, from between 2038 to 2046 BC. And this was used to record transactions of things like barley or animals, for example. And if you're interested in the history and the story of money and finance, really, then I would strongly recommend you reading a book called The Ascent of Money by Niall Ferguson. And I've actually recently done a course on that book with my group. So currency is essentially the medium of exchange or what you use to pay for goods or services. And this is one of the properties that effective money should have. Let's look at the other part of cryptocurrency, which is crypto. And the word crypto comes from Greek originally and then Latin, and it means hidden or secret. And the act of cryptography is what guarantees the security of this currency. So cryptocurrencies, cryptography is what guarantees the security of cryptocurrencies. And if we look at cryptography, we've just seen crypto means hidden, and graph, the other part of cryptography, comes from the Greek meaning writing. So cryptography essentially means to write codes and then solve them. And I've given an example of a crypto puzzle here on the left called a cryptogram to be solved. It can sound quite confusing or even a bit dodgy with meanings of hidden or secret, but cryptography is essentially coding using different things like algorithm. Okay? And remember, the second bullet point down, this is what guarantees the security of the cryptocurrency. And we're going to see this again in a bit. So when you merge the two words currency and crypto together, you get cryptocurrency. And cryptocurrency is a type of currency that uses cryptography as an underlying mechanism to provide security and verify the transactions. And you can see a definition of cryptocurrency in the picture here as well. They call it, by Investopedia, which is brilliant, they call it a digital or virtual, same thing, a digital currency secured by cryptography and based on a network that is distributed across a large number of computers. So cryptography, solving these codes, is used as the underlying mechanism to provide security and to verify the transactions of cryptocurrencies. And this cryptography is where the term proof of work comes from in cryptocurrency. Proof of work is a decentralized consensus mechanism that requires network members to expend effort in solving an encrypted hexadecimal number. And it's called proof of work because basically it requires work. In this case, it says to expend effort, but it requires work or cryptography to verify transactions and then add them to the blockchain, which we'll see a bit later. And this requires computers to do it and to solve complex puzzles, if you will. Bitcoin, that we are going to look at soon in this video, is the biggest example of a cryptocurrency that uses proof of work. But there are others, Litecoin, for example. Proof of work can also be called mining, and that's in reference to the reward or receiving a reward for the work that the computer does or that you do. And Bitcoin mining is the process by which new Bitcoins are created or entered into circulation. It's also the way that the network confirms new transactions, and it is a critical component of the blockchain ledger's maintenance and development. And you can see on the right-hand side an alternative definition of proof of work. It calls it a blockchain consensus mechanism in which computing power is used to verify cryptocurrency transactions and then to add them to the blockchain. So if you just remember cryptography, proof of work, Bitcoin mining, it's about using computers to solve problems using these computers, okay, complex ones, algorithms, things like that. And that is how cryptocurrencies essentially work, how the transactions are verified. That's to put it as simply as I possibly can. You can go very technical, but I want to keep it simple. And there are many advantages of proof of work, particularly when you're looking at security and when you're looking at decentralization that we are going to see a bit later. But the downside of it is that you need a lot of electricity to run all the computers required to solve all the problems, to verify all the transactions, etc. And when people have tried to attack the crypto industry, they've often used this as an argument as to why it should essentially be banned. But in the great scheme of things, and especially recently, this argument has lessened considerably, and there have even been studies debunking it. It is something to look at in the future, because ideally, if this can be run using renewable energy, that would be the best of both worlds here. We're going to now compare the traditional financial system with cryptocurrency, because cryptocurrency doesn't need or use a traditional or a central bank to verify its transactions or to keep its money. So it doesn't need a third party to do so. So a question early on to think about then is, what is more secure? A system that is protected by secure code in cryptocurrency that cannot be manipulated by individuals, or a system that is protected and controlled by people and their institutions, such as central or commercial banks? What is more secure, in your opinion? Because when you transact currently, you'll probably use a credit card or a debit card, and you'll probably use contactless, and you'll put your card on the reader to pay for your goods if you're in a shop, or you'll enter your card details online to purchase something. But what happens when you do that is the device in the shop or the website online will communicate with your bank. That will then check if there's enough in your account, and then it will ask it to change your balance, and that is when the transaction will go through. This system needs commercial banks and central banks to manage this closed system. So there is a central system of control here, because they hold essentially your money, and that is where the term centralization comes from, as they can change the rules. And as we know, banks can even become insolvent. They can even lose your money that they hold or should hold. And I've included a definition of centralization here, just for us to really understand. So centralization is the concentration of control of an activity or organization under a single authority, like a bank. Whereas cryptocurrency doesn't have one single power that can decide what happens within that system and with your money. With cryptocurrency, the whole network verifies your transaction rather than one entity like a bank. So the idea is for you to hold your own money and decide what you do with it, rather than leaving this with a third party or a bank. And this is referred to as decentralisation. And are people going to be happy about this transformation of money from centralised to decentralised? Of course they're not. No chance. I'll give you some examples. When the first gold certificate or the first paper note was issued, instead of actual gold or a precious metal, the response was, well, that's not real money, is it? What's that? Okay, of course, it's natural. And will the central and the commercial banks be okay not holding and controlling our money? Of course not. They need our money to survive, and they'll want to find a way to do this, whether it is ignoring cryptocurrencies at first and then belittling them and then attacking the space, but finally having to try to adapt to the new technology without admitting they were wrong, of course, which we'll see in a bit. So let's go to the beginning of cryptocurrency. And it's fair to say that cryptocurrency properly started with and is spearheaded by Bitcoin. And Bitcoin is the largest cryptocurrency by market cap today, or in other words, the total market value of it. Ethereum, or ETH for short, is in second place, but Bitcoin currently has more than double the market cap of ETH in second place. So it is by far the most popular, and therefore it is the only one that I'm going to focus on properly in this video. As we've seen before, it is proof of work as well. An unknown person, who nobody knows who it is, called Satoshi Nakamoto, launched the Bitcoin white paper on the 31st of October 2008, in which they explained their idea for Bitcoin. And it can get a bit complex, but I will try to include a link to the white paper in the description below so you can have a read. Bitcoin has a maximum supply of 21 million Bitcoin. So it does sound like a lot, but it is a scarce resource, and it can't be inflated indefinitely like the currencies we have at the moment. And if you've seen my previous video on the state of the economy and where I think it's going, you'll know I spent quite a bit of time looking at inflation and the issues that surround really the money supply and creation of money. So is Bitcoin financial and technological innovation and the starting point for the future of finance? Or is it simply a financial bubble or a fad, if you will? Firstly, we should say that the price of cryptocurrencies is volatile. So it does go up and down like a bubble could, but most new technologies experience this. And if you look at companies, even like Amazon and Apple, you will see drops. And if you look in the history, you'll certainly see them. I'll give you an example. The price of Amazon, even in 2022, went down by 14% in one day in 2022. And between 2021 and 2022, Amazon shares went down by 55%. Okay, so these things do happen, and they are part of the wider economic cycle. However, crypto is admittedly more volatile currently. And innovation normally goes through different stages of adoption anyway, that you can see on this diagram here. The question is, where is Bitcoin currently on this diagram? If you look at the top of the diagram on the right-hand side, you'll see mainstream market highlighted. So you could argue that we are on the early stage of the mainstream market. We're in the pragmatist section, or the early majority section, the early majority stage of adoption. As of June in 2023, there are around 219 million global Bitcoin users. So you would think that would back up the idea that there is quite a lot of adoption. So we probably are in the mainstream market, probably in the early majority, the pragmatist side. However, that equates to only 2.7% of the global population. And institutional investment and adoption has not taken off yet, because regulation is only coming into force in the next few years for cryptocurrency in certain countries. So there's actually an argument that we're not even in the pragmatist stage. We're in the early adopters or visionary stage still. It's obviously open to interpretation. I'd love to know what you think in the comments, but I want you to be thinking about this, and I'm trying to give you an overall picture of development of a new technology. And Does Bitcoin have the staying power? Does it have enough adoption, or is it simply going to go away? So again, with the length of time that it's been leading the cryptocurrency market, and with all that it's gone through, all that it's survived at every stage, and the fact that its lowest market cap in the last 3 years has still been over $300 billion, with an all-time high of over $1.25 trillion, it is unlikely at this stage. And that is fairly well agreed, that it's not just a bubble or a fad, and it is here to stay. And I want to give you another bit of evidence for that. So if you look at the ETF applications for Bitcoin by the giants like BlackRock, and what was released in literally the last day were recommendations by them that you hold BTC as a large part of your portfolio. So I think it is quite difficult to argue otherwise, the adoption, the innovation, and the future of Bitcoin. Let's now look at 2 examples of new technologies in history that have been adopted and the issues that they went through. And I want you to try to compare these to Bitcoin and cryptocurrencies and ask yourself, is a similar thing happening here with Bitcoin if we compare it? And obviously you can see here, we're going to start off by looking at cars. So cars were originally seen as being very dangerous. They were a death trap, or even called devil wagons, apparently, or they were once called. And a bit like with the TV, they were only seen as being for the rich at first. So you couldn't envisage the kind of adoption that we have now with cars at that stage, because people saw them as being dangerous, for the rich, and also there was no proper infrastructure for cars right at the beginning. There were no like tarmac roads for them. So essentially what happened is they frequently got stuck and then they had to be pulled out by horses. People therefore were understandably very skeptical about the need for cars given these 3 points. And this created a divide between those who saw the potential for this new technology and those who wanted to stick with the horse and cart because it was what they used to and it worked. However, by 1930, 23 million cars were on the road in the US, and more than half of American families owned a car. And you know where that story went from there, because if you look on the graph on the right-hand side, it shows the decline of the use of horses in the US and the rapid increase of cars. And that figure 1930 is where cars have overtaken horses. And it kept going, kept going, and kept going. And the same thing happened with the internet. The infrastructure, when the internet first came out, wasn't there to support fast access to the internet in the early stages of the kind that we know today. The telephone or the utility company's cables couldn't support the fast speeds we're used to today because they were designed to transmit audio data through the phone rather than the large quantities of data the internet requires if you're going to maximize its potential. And if you're of a certain age, you will remember trying to connect to the internet through dial-up, which I certainly do, and a modem with the noise that it made and the painfully slow speeds. And you can see here a couple of jokes, if you will. Top right-hand side, it's going to take 39 years, apparently, to download 180 megabytes, which is not massive. And then in the top left, the kids are now complaining about waiting 5 seconds for Netflix to load. Meanwhile, we had to live through this. 5 attempts to connect. But if you want to find out more information about this, particularly comparing the internet with Bitcoin, but also cars as well, I would encourage you to read here The Internet of Money by Andreas Antonopoulos, which is simply incredible. And a lot of people find it quite mind-blowing. He actually calls Bitcoin the Internet of Money, hence the title of the book and this slide. You can also get it on audiobook, which is still great because it's essentially a series of lectures which is included. And if you are liking this video and if you're liking this content, please do like and subscribe to the channel, as it really does help grow it. And please also do let me know if you want anything explaining in a bit more detail or any other content that you'd like to see, perhaps at the end of the video. But let's keep going. If we compare the car and the internet that we've just seen now to Bitcoin, the issue both of those new technologies had initially was with their infrastructure. So the quality of the roads and the speed of the cables. And this is the same issue with Bitcoin. because it has an issue with how to scale it. The Bitcoin network can only process about 7 transactions per second. And compare that with Visa, which can process more than 65,000 transactions per second. There's a slight difference there. Having said that, there are already some solutions that exist, such as with the Lightning Network. And the Lightning Network is basically, it's a layer 2 solution or network, which sits on top of the Bitcoin network that you can build apps on and you can scale transactions that way. Also, you can get crypto cards in which crypto companies have partnered with Visa or they've partnered with MasterCard to try and get over this issue of scalability, because they're using the speed of Visa, the speed of MasterCard, but then the power of crypto. And you can often pay with your cryptocurrency for things like in a shop, and even get sometimes get some crypto rewards back every time you use the card. I do have to say here, this isn't financial advice. I'm not advocating or promoting any of these cards individually on the screen. I just wanted to show you that some exist, and this is a potential solution to scalability that they're looking at. So if this is the initial stage and we're still in the early adoption or the visionary stage, where will it end? That's the question. Can we see the future? And this does lead us to believe that we're still in the early or in the evolution of cryptocurrencies, as there's so much more development, so much more innovation, so much more adoption to come. It is extremely difficult to predict where new technologies will lead and even how long that innovation will take. If we go back to the internet, for example, when people were sitting there at a computer and they were struggling to open a website or send an email because the dial-up connection was so slow, it was obviously pretty difficult back then to see what could come from this technology and who could have predicted where we are today. I'd say it would be almost impossible. And I'm going to use the example here of the video rental company Blockbuster that we had in the UK as well. And that had over 9,000 stores worldwide and employed 84,300 people in 2004. And that's where you went into the shop and you rented a TV series or a film, you rented it and then you gave it back once you'd watched it. But what do we have today? Today, we have things like Netflix and Amazon Prime, to name a few, where we can actually stream programs and we can stream films immediately. So we no longer need to go to a store to rent one. So the internet has changed this entire industry, and Blockbuster could have either adapted or it could have closed, which it did. It didn't survive. Even now, with the TV, let's look at the adoption and innovation with the television. You had first, like, it's amazing, you had the invention of color TV. Wow, incredible. And then, going forward a bit, the amazement of being able to record programs on television was huge. When people were struggling with their, if you remember, VHS cassette tapes, who could have imagined the picture quality that is available today? Or even at that stage, the invention of color TV, who would have thought that you'd be able to pause live TV now? So it's very difficult to see the future with these things, but innovation comes. And we also, as you can see here, we have huge companies that have been able to scale in a big way thanks to the internet. For example, Uber, top left, doesn't own all its fleet of cars at all. Airbnb doesn't own all of its own properties. And Amazon doesn't create all of its own products, but they use the internet. And on the bottom row, you've got Instagram, Facebook, YouTube, that obviously we're using here. They're some of the largest producers of content in the world, and they hardly produce any content themselves. And this was all made possible due to the internet and the adoption of the internet and the innovation in the internet. So I know we've only looked at Bitcoin here really, but the question I'd like you to think about is, where is the crypto industry going and would you invest in it? And as we've looked at the issue of scalability of Bitcoin and the car and the internet initially, due to their infrastructure or the problems with their infrastructure at the beginning, I want to introduce you to something here which is really important to understand in the crypto industry, and that is the crypto trilemma. So before you go off exploring other cryptocurrencies, and certainly before investing, I would advise you to think about this and ask yourself where each cryptocurrency sits, or certainly the cryptocurrency you're thinking of investing in, where does it sit in this trilemma? Because, I mean, normally it's a dilemma, but there's three, so it's a trilemma. The trilemma in this case here is that a cryptocurrency cannot have all three of these things. It cannot scale at large, be very secure, and be very decentralized. If you research, you go onto the website of a lot of cryptocurrencies, a lot will claim they do all three, but in practice, it's not possible. So the question I've got for you is, which one of those three would you rather not have? And for me, it's what Bitcoin has. So Bitcoin has security and it has decentralization, but it doesn't have the scalability that we've seen. And maybe that's part of the reason why it's so popular, because it's secure and it's decentralized, but it's not terribly scalable. But I'd love to know what you think there. Which one would you most not want to have? And please, before we move on, before you invest in anything, do your research and educate yourself. I do offer one-to-one coaching for people who are looking for a bit more guidance or a bit more hands-on support, and people who want to invest in their education and obviously have the money to do so. So if you are interested, just put education in the comments below. I'll get in touch and you can have a free 30-minute call with myself or one of my team. I'd like to end this video with a few commonly asked questions I get. And the first one is quite a difficult one, really, because it's, what is a blockchain? And this, you could do probably a 5-hour video on what a blockchain is, but I may do a future video on it in a bit more detail because it can get a bit complex. But as you can see on the image here on the left, a blockchain is a digital database or a ledger, and we have ledger in business, even handwritten ledgers, but it's a digital database that's distributed among the nodes of a peer-to-peer network. And a blockchain is what records the transactions on the network. For example, the Bitcoin network. So if you want to think of it a bit like a ledger of accounts, it's essentially that, but it exists digitally on the network. And most cryptocurrencies use blockchains. So let's kind of recap a little bit. So a blockchain is a type of shared database that stores data in blocks that are linked together via cryptography that we saw earlier. Transactions, when you transact in Bitcoin, they are stored on the blockchain through distributed ledgers. Again, just ledgers that we've talked about, which are distributed across the network. A blockchain isn't a currency, it's not a system of currency, it's a mechanism and it's a platform of trust. What's really powerful and interesting is that in a decentralized blockchain network, such as Bitcoin's, no one has to know or trust anyone else. There's no central power. Each member in the network has a copy of the exact same data in the form of a ledger. So everybody has a copy of the ledger. And if a member's ledger is altered or corrupted in any way, it's going to be rejected by the majority of the other members in the network because it doesn't match. For Bitcoin, the blockchain, as we've just seen, is decentralized. So there's not one single person or group who has control over it, unlike banks, because all users collectively retain control of it. I think it's important to note here that decentralized blockchains are immutable. And what that means is that the data that is entered is irreversible. So for Bitcoin, transactions are permanently recorded and they're viewable to anyone. So a lot of the arguments initially were that Bitcoin is really secret and it's only used pretty much by criminals. I mean, the traditional financial system is used by criminals. I think we're kidding if we think otherwise. But actually, all of the transactions are permanently recorded and viewable to anyone. So it's just not true. And what you've got here on the right-hand side is a good diagram explaining this process really and the properties of what they call distributed ledger technology. which again is a bit like blockchain. So it's programmable. A blockchain is programmable, i.e. through smart contracts. It's secure. It's anonymous. It's unanimous. It's time-stamped. It's immutable that we've just looked at, and it's just distributed across the network. All right, there's complete transparency. The only one I'd slightly disagree with there is anonymous, because it's transparent. So it's this. Not sure I agree there. But what I'd like to do now is pause, and I'd actually like you to show. I'd like to show you a video that explains this whole process really, really well, and it's from the BBC. It's only a few minutes long, but hopefully, if you've not picked this up yet, this video will really clarify this for you.
When you want to buy something normally, using your normal bank card, this is what happens. I give my card details to the shop. The shop asks the bank if I'm good for the money. The bank checks its records to see if I've got enough in my account. If I do, it lets the shop know. It updates its records to show the movement of money from my account to the shop's. Oh, and it takes a little cut for its trouble. Now, if you wanted to remove the bank from that system, who else would you trust to keep those records and not alter them or cheat in any way? Well, I wouldn't trust you. I wouldn't trust you. In fact, I wouldn't trust any single person, but I might trust everyone. The idea is you don't have a central record of transactions. Instead, you distribute many, many copies of this ledger around the world. Each owner of each copy records every transaction. So, to buy something using cryptocurrency, I give the shop my details. The shop asks all the bookkeepers if I'm good for the money. The bookkeepers all check their records to see if I have enough. If I do, they tell the shop, and then all update their records to show the movement of money. So there's no way that a forged transaction can make it in. If I try to alter a ledger, it won't match all of the other copies, and it gets rejected. Oh, and one of them, at random, will be given a reward of some newly created cryptocurrency. This is how cryptocurrencies work. And remember, all of these bookkeepers, all of these ledgers, they're not actually people, they're computers. Lots of computers.
So hopefully that video helped to bring everything together that we've looked at in this video so far. The next question is, can you own your own physical Bitcoin? And it's not actually a stupid question, because you see a lot of photos of people holding them up, like you can here. However, cryptocurrencies are digital. So when you see pictures of coins or people holding them, that's not actually what they are. I'm sure you can buy these. Well, obviously you can, but they certainly won't hold the same value. For example, it's not as if you bought one Bitcoin that you would then get sent one physical coin. Right? It doesn't work in that way. They're non-tangible, and they exist digitally on the blockchain. A bit like stocks and shares do, if you want to imagine it in that way. You don't physically hold one, they exist digitally. The penultimate question is really a bit more of a statement, because you hear this all the time, especially when Bitcoin's price is going down. Is Bitcoin just a bubble? And you essentially hear, it's normally in a panicked tone, but Bitcoin's price is going down. It must be a bubble. It must be a scam. So my first piece of advice here is you have to do your research on each project as much as you can, and educate yourself in everything you do. Nothing I cover in my videos is financial advice, just education, and really my opinion based on my experience and working with others. Try your best to detach your emotions from your investments as much as you can. It is difficult, but don't chase the next best thing or the next biggest thing. wherever possible. For example, I'll give a meme coin. I'm not going to go into what a meme coin is, but if the price of the latest meme coin has gone up by 60% and everyone's, whoa, personally, I wouldn't be rushing in to invest in that. But again, it's not financial advice. You can obviously do what you feel is right, but try not to follow the crowd and the euphoria of investing in crypto. Try to stay level-headed and make decisions based on your research, based on your values, and based on your education. And I have a saying, which is, if you've got a doubt in something, there is no doubt. Just don't invest in it. Or as Warren Buffett said, never invest in a business you can't understand. So it's the same idea. I'd also ask, what is your time frame for holding the cryptocurrency? Because my advice is invest in solid projects over the long term. So if you're looking for long-term gains, even potentially generational wealth, and you're looking at a time frame of over 10 years, for example, then that makes sense. And that is why it's important to do your research, as the project needs to grow over that time frame. And let's look at an example of that. Let's look at Bitcoin. I just want to show you this, the euphoria and really the state of sadness of when it, that's why I'm saying keep a steady emotion wherever possible. When recording this video at the end of July 2023, the price of Bitcoin is about $29,000. If I'd invested back in November 2022, Bitcoin was around $16,000. So I'd be seeing some gains and I'd be happy. If I'd invested even further back in November 2019, Bitcoin was just over $7,000. So I would have actually quadrupled my investment in under 4 years, which is incredible. However, if I'd invested in November of 2021, when it was around $63,000, I would have lost a lot and be really, really sad. And this is where the emotion comes into investing. If you're trading, it's obviously different because it's a shorter time frame. But if you're looking for longer term investment and gains, which is what I advocate, then you need to invest in projects that you're sure about and hold for a longer time frame, in my opinion. But it's not financial advice. It's just my opinion. If you're confident in what you're investing in, if anything, in my opinion, you should almost go against the grain of what everyone else is doing. So for example, when the price of Bitcoin is low, a lot of people are panicking and they're selling. They get out, sell. You could actually use that as an opportunity to dollar cost average in to get more, if you're confident in the project. Inversely, when the price is high, a lot of people are buying in because they think it's going to go to the moon. Oh, it's amazing. Get in, get in, get in. Actually, you could use that as an opportunity to take some profits. And finally, don't worry about trying to time it. So don't try and time when it's at its lowest or when it's at its highest in the cycle. It's very, very difficult to do so, and you can never really time it, which is why I said dollar cost averaging. Putting a little bit in every so often could be the best way of doing it. And the final question that I get asked a lot is actually how many cryptocurrencies exist? And although it is quite difficult to give an exact number, according to CoinMarketCap, which is online, there are just over 10,000 active cryptocurrencies at the moment. So that shows just how vast the cryptocurrency market is and what a rabbit hole it can be. And that's why sometimes you just need to start with the basics, educate yourself, not get overwhelmed by all the noise and all the hype and all the fear that exists in the industry. And that's exactly what you're doing here by watching this video. I personally believe that this is a new nascent technology that will only grow from here. So it is worth investing in and it is worth holding for the long term. But I would love to know what you think. So let me know in the comments, and that's where I'm going to end this introduction to cryptocurrency. So thank you very much for watching. I hope you got something out of this video. And if you haven't already, please like and subscribe, and have a great day.